to the podcast. I'd like to take this time and welcome John Brackett, CEO and Managing Director, Fidelity Business Partners Incorporated, to the Real Estate Mavericks. And welcome, John. All right.
Hey, I appreciate you having me, Bill. I am excited to be here and humbled by the invitation.
Okay, great. So John, you've got over 25 years experience in finance and real estate. You've clearly built an amazing career. What initially drew you from your a decade in commercial banking and with institutions like Wells Fargo and California Bank of Commerce into full-time real estate investment and development with your company FBP? What got you going on this?
Yeah, the short of it is when I was in commercial banking, I was missing a lot of time with my wife and my at the time my oldest daughter, and so
Yeah.
I started to think about businesses that I can get into that would give me more time with my family. That was really the I think
Mm-hmm.
the that's what started the ideas, right? That's what started the idea.
Mm-hmm.
Um, when I was in, when I was in commercial banking, I think one of the greatest things that happened to me early in my career was I was in this group called the Business Banking Group, and my job was to go out and acquire businesses that generated between $2 to $20 million in annual revenue, right?
Okay.
And I sold them loan products, right? Commercial loans. Also now it's called treasury management, which or treasury services. But that experience gave me a really unique opportunity to really understand what businesses, at least in San Diego at the time, were profitable, why, and it gave me some perspective as to, you know, what I felt I wanted to maybe do long term. So that's kind of what started. And one thing that I did learn early on, going through that whole banking process with my banking career, was that 80% of the wealthiest individuals that we banked built their wealth through real estate, and I never forgot that. So
Okay.
that's what really,
Mm,
I think inspired me to go at this full time in 2008.
nice. Speaking of, now you launched FBP in 2008, a rather challenging time for all of us,
Yeah.
especially in real estate. What was your driving vision behind FBP then, and what were the challenges you faced during the meltdown year when you started this?
Yeah, so that's a great question. So my interesting story. So I got let go in 2008. I was a senior president of the bank um, uh, in San Diego at the time, and the president and I we just didn't see eye to eye on things, you
Hmm.
know. And so I got let go, and I was really grateful. In fact, really interesting story. When I got let go, I was relieved because I knew that I wasn't going back to corporate America. I just knew it.
Yeah.
So it was a really
Mhm.
big relief, actually. And at the time, my wife was 8.5 months pregnant. Our
Okay.
second our second daughter on the way, and
Yeah.
we just moved into a place near the coast out in Carlsbad. So, I was trying to figure out how to tell my wife when I got home that, hey, I got laid off. I got fired and we don't have insurance anymore. So Bill, here's what I did, right?
Okay.
I got home and I didn't really know what to say to her because I didn't want her stressing out. So I
Yeah.
opened the
Yeah.
door and I said, hey, guess what? I got laid out. I got fired from my
Oh,
job.
you did. Oh, wow. With a
What
smile,
else?
I guess.
What else do you say, right? I mean, you're
Right.
you're in you're in the
Yeah.
worst economy I think that this country has ever seen. My wife
Yeah.
was 8.5 months pregnant, right? Our second daughter on the way, and women
Yeah.
love comfort and security and safety, man. And that wasn't a comfortable or secure or safe
Oh my
time.
God.
So I just
Oh,
come out and tell her. But here's what happened, though, right? And I never forgot this, which is one of the many reasons why I really love my wife. We've been married for 30 years now. Um, I told her, I said, hey, I lost my job, and obviously she was stunned. She stared at me and didn't say anything for probably a couple seconds, but it seemed like 5 minutes. And then finally, the words out of her mouth were, "Hey, now you can go out and do what you were absolutely designed to do." And I never
whoa.
forgot that. So we high-fived, went out and celebrated with sushi, and the next day I had to get to work because, I had people
Yeah.
to take care of.
Yeah. We
So
go.
failure wasn't an option, though. It wasn't an option.
Yeah.
So, I found a way
Nice.
to, work through things, and
Yeah.
by God's grace, we're able to make
Mhm.
some good decisions, and they paid off.
Okay. And what was the driving vision behind FBP then? And how has that evolved over the past years since then?
Yeah, well, Fidelity Business Partners was really driven by, my banking background. What I think understood early on was that as we started to grow and started to really brand ourselves and develop or create some niches that we wanted to be in, I understood that we needed capital and I did not want to borrow from banks.
Mm,
So interestingly enough, for the first, I think, 6 years that we're in business, we didn't borrow a penny from traditional banks.
mm,
And the reason for that is when I was in banking, especially during 2008, I saw a lot of very good customers of ours um, get into a very challenging financial situation, and the banks were calling their loans, and it created a lot
yeah.
of problems. So I never forgot that, and I just wanted to
Mm,
make sure that we could build out a platform at the time where we weren't dependent on banks. So we created a platform where we were not, and most of our clients at the time were a lot of the people that I banked and gave credit lines to. A lot of our business clients, once they realized that I went off on my own, they followed me, and that was really the capital um, that
mhm.
followed us to help build this out. And eventually, as we grew and got bigger, then yeah, banks come knocking on your door usually when you don't need the money, but we were still able to leverage that. We're still able to leverage those dollars into what I thought was good opportunities. But the summary is this: Fidelity Business Partners was really built out of the idea that we wanted to transition and operate like a private equity company and give what I felt were institutional level quality services
Mm,
to um, you know everyday people, right? Like you and I
yeah.
that didn't have access to $2 billion of capital rather that
Mm,
we just
mm,
wanted to make sure that we made great decisions, but still provide the level of service and the tools that institutional investors have. So that's what
mm.
drove it.
Nice. So Fidelity Business Partners is vertically integrated. You handle acquisitions, construction, and property management. What was the strategic decision behind bringing these functions in-house for you guys? And what advantages has that given you in maximizing, say, investor returns and your business model?
Yeah, it was really, really simple. We tried using third parties early on. One of the very first properties that I purchased was a 24 unit property in Houston, Texas. And, we got a great deal on the property, but it was out of state. So the short is that we tried using third parties, and frankly, I just got tired of of getting ripped off. So one day, I came back to my wife and I said, "Hey, look, we can figure this out." At this point, we really have nothing to lose, right? I know we can do a better job. It's something that if we want to stay in this business long term, we're going to have to figure it out. And so we did. And
Mm,
so we launched our property management company. I think it's been 8 years now, maybe 9 years ago, if I'm not mistaken. And
mhm,
then, consequently, we started in the construction space in 2009 because
mhm,
we were at the time, renovating a lot of properties in San Diego. We've done over, I think, 150 in San Diego. And so we understood how important it was to be able to control your construction cost and your teams and just the leadership related to that and the culture that we needed to build around that. So that's what started that. That's really what
nice.
gave us the understanding that, to be able to build out something vertically integrated, or in this case, an investment company that was vertically integrated with those other functions, just gave us a higher probability of success of
Mhm.
executing our business plan. And, that's really paid off well for us.
Nice, nice. Uh, Currently, Fidelity Business Partners primarily targets multifamily assets in Southern California, Houston, and San Antonio. Um, could you comment on what specific market dynamics or trends make these regions very attractive for your investment strategy right now?
Yeah, it's actually a really great question, Bill. So I posted a summary to answer that very question.
Hmm.
I think it was a LinkedIn post, if I'm not mistaken, probably no more than like 2, 3 days ago. But the summary is this: each of those
Okay.
markets, they offer something different, right? And so
Yeah.
for us, over the years, as we grew our private investor base, we've learned that investors have some very common needs. Okay. And so, those markets, they offer something a little bit different, if you will. San Diego,
Hmm.
for example, it's a very dynamic, very robust market. The education base here is very high, right? There's a lot of professionals. It's a high demand market. So you're going to have the lower yield, right? So lower yield
Yeah.
on cash, right? Lower return on cash, probably in the 5% range,
Hmm.
but very high appreciation, right?
Hmm.
An IRR
Okay.
basis, usually on our deals, will take us over 18, 20%, somewhere in that range. So that blend becomes very attractive to a lot of our investors because, you know, some of them are not in growth mode anymore, right? They've made a lot of money, and what they want to do is place their money in markets that they feel are very secure and stable.
Right.
They're more on the capital preservation side of the equation now, and San Diego appeals to a lot of those investors. Houston, on the
Hmm.
other hand, is higher yield market, right? 6 to 8%, yield or return on cash. Internal rate of return, we're usually above the 15% range, 15 to 18%. And that market appeals to folks that are in growth mode, right?
Okay.
That really want to drive yield and appreciation. Houston, a little bit different. That industry, or that MSA rather, it's a heavy industrial market, but the primary driver there is energy. A lot of people
Yeah.
don't know this, but our number one exports in the United States, guess what it is, Bill?
Oil. Okay.
It's actually not oil. It's a byproduct of oil, plastics. We are the largest net
Okay.
exporter of plastics in the world, actually.
I
Yeah.
see. Yes,
Yeah.
yes.
So,
Okay.
so that's one of the drivers there. We wanted to be in an economy that we felt could weather downturns, right? But you have to be very calculated and smart about what you buy when you do that. But anyway, that was the driver there, right? It's a very
Okay.
big, depending on where you're buying, but energy is a very big driver there,
Yeah.
and net exports are very big there. The
Mm-hmm.
other side of that too, and Houston, by the way, has a very unique, I think, business base. With all the medical centers there, very, very unique. We own several buildings near downtown, one in Montrose, and so the economics there are a little bit different. San Antonio is kind of the in between of the two,
Mm-hmm.
and that appeals to our investors that want a little bit more yield, but um, they don't want to be as aggressive. And some of them, like the San Antonio markets, are familiar with it. But it's really a blend of the two. San Antonio, a lot of military bases there,
Mm-hmm. Right, right.
Air Force, Army, and then of course healthcare as well. So that's really the strategy behind those markets. And when you blend them all together, they've worked really well for our investor base.
Nice, nice. So, uh, a different type of question here. You mentioned improving residents' quality of life while generating passive income for investors. How do you balance those two objectives, especially in today's kind of harsh economic climate, with rising interest rates and construction costs? And yeah, increasing residents' quality of life. Can you speak on that?
Yeah, absolutely.
Yeah.
Really simple. Our purpose when we built out Fidelity was we understood that for us to be successful, we had to make our customer number one, right? We couldn't lose sight
Mm,
of the fact that our customer um, is what's driving our success. Okay. whether it be on the investor side of the equation or the tenant side or the resident side, as we like to call it. And, the whole idea behind it was that when we acquire an apartment building, at the end of the day, we realized that ultimately what we were doing was we're influencing small communities. An apartment building is one of the only, it's like a microcosm of a large community, right?
Mm-hmm.
We have the opportunity to create influence there and build out a community that is functioning, that's thriving. And so I think once we connected those dots over the years, we realized that we had a lot of direct influence over how those apartments functioned as very unique communities. And so that's really where that came from. Eventually we evolved our purpose to building out great apartment communities and improving the way that people live. And in our case, we're offering space, communities that are functional and that we felt, were competitive to other communities around us, but that had a very unique feel. And I think above all, just the quality of service that we were able to provide, just improve retention, and we just kept with that model.
Okay. From your perspective, John, what are the biggest shifts right now or challenges that you're seeing in multifamily real estate investment, particularly concerning like investor expectations or acquisition strategies, and industry wide, or drill it down into your industry specifically. But yeah, what are the biggest shifts and biggest challenges today?
From whose standpoint? From the investor standpoint or from our standpoint?
Yeah, from your perspective, yeah, I mean, right from your company's perspective, excuse me. So
Okay.
yeah,
So
and then
I'll give you
maybe
I'll give you both perspectives. Okay, I'll
yeah,
give you ours, and then I'll give you also our investor base and at least
yes,
what I'm
yes,
hearing,
yeah,
and what the feedback is that we're getting. So
sure,
I'll start with our client base, or at least the feedback that I'm getting from investors. Okay, so when
okay,
someone reaches out to us, when they've been a client for a while, it's very different because I think we do a really good job of communicating with our investor base and then giving them an idea of where we're going as a company and the opportunities that we see.
Mhm.
But what I often hear in post or feedback that we're getting from just investors, just broadly speaking, is I think there's an education gap, right? Um, you know, I I think there's a little bit of concern in the
Mm,
marketplace about what this economy looks like and feels like, and where it's going, and no one wants to lose money. I know I don't.
mm,
I
yeah,
I doubt you do, Bill.
no, no,
So I think
yeah,
that's the real fear, right? Is, hey, look, where can I place my money in today's market where I can generate a really good return on cash or a yield that I'm going to be satisfied with, but where I'm not, taking on too much risk, right?
mm,
So that's
mhm,
really I think the reoccurring theme in this marketplace. My comment there is I think there's a lot of misinformation, or there's a lack of education with our with investors out there, folks that want to place money, and I'm going to get back to that. Okay.
mm,
The greatest challenge that we're having right now and I think this might be, this might be something for, a lot of companies in our position, is finding really great people to hire, right?
mm,
And that's
mhm,
always something that we want to look at. And
mhm,
we're always looking to hire great people in different capacities throughout our company. But I think right now, as we're focused on growing, especially in different markets, we have to be, I think we have to continue to evolve and find ways to attract just exceptional people and bring them
yeah,
into a culture that they really want to be in. But I think more importantly, where they can contribute and bring in different ideas, different strategies, different ways of doing business to help us continue to evolve and provide a great platform to our client base. So,
mm, okay, yeah. Um, that's a challenge a lot of businesses are facing these days for sure.
yeah,
Um, and you got to be creative about trying to solve that for sure. Um,
I agree.
so your company's mission is about community enhancement and putting your clients number one. Can you share an example of how Fidelity Business Partners has transformed an apartment community and what impact that had both on the residents and of course on investor returns? But yeah, how did that go specifically for you?
Yeah, absolutely. So I'll share one that's really extreme and one that's
Great.
very, very recent. Okay.
Yeah.
Recent as in last week.
Okay.
Okay.
Yeah.
So an extreme example of this is, I think this was probably about 10 years ago, 9 or 10 years ago, purchased this one I believe was a 21 unit apartment building in Texas.
Mm,
Okay. And this was in Houston actually.
okay.
And that apartment building had 21 felons in a 21 unit apartment building. Okay. And
Wow.
so when
Okay.
we took it over, it wasn't a C property, it was a D property, right?
Right.
But it was
Got
in a
it.
location that I felt really strongly about. I think it was being overlooked, and I felt that there was some underlying economics there that as long as we manage the asset really well over the long term, we could reposition it and appeal to a really good buyer, which
Mhm.
that's exactly what happened. But
Okay.
the short of it is, we went in there and we made some changes to the community. A lot of the older residents that they left, and we brought in, I think a resident base that really appreciated the new product that we built out. They love the area. Um, that property, interestingly enough, it went from something like, I think at one point, from what the police were telling us, because I pulled a report from the police, right? How many complaints did they get from that particular property before we bought it? So I knew what we were getting into. Frankly, I just
Yes.
I just didn't know it was that bad, right? But we got a lot of really great experience from that property. But the summary was, we took a property that was very, very challenged, that created also a challenge for the community that it was in, and we ended up turning that around to a property where it was operating so well that one of the owners of an adjacent property reached out to me and said, "Hey, we love what you did here. We want you to sell us this one. This used to belong to, I think it was her mother." And we end up buying that because of how well that property is performing in the community. Uh,
Mm,
and we just completely turned it around. So we end up buying her property because she still had a really big emotional attachment to it, which I understand, and she wanted it to look like what we did to that entire
yeah.
community, right? So it was a win-win all the way around. We also kept two of the residents that were there, that had some criminal backgrounds, and I was so impressed with them as individuals as I got to know them, that we kept them on board as our maintenance staff. And
Nice. Nice.
that
Yeah.
that was I think that was two really good hires on our part. One of them was with us for 5 years there, and then we
Mm,
end up helping him and his wife buy a house out in the Houston marketplace. So they,
mhm.
they were able to, leverage that job experience to actually purchasing a home out in Houston, which was great. And the other one, we helped transition into another career. We helped career path them as well. So that's a really great
Excellent.
example. And, I think at the
Excellent.
at
Yeah.
at the 7 or 8 year mark, we end up selling that to a Fortune 50 company, and our investors won as well.
Is that the one where you got nearly six times the acquisition price? Or
That wasn't that one, but it was one of them.
oh, one of them. Okay. All right. That's an amazing, amazing true story. So, and what about current success here?
Yeah, so a recent one would be a San Diego asset that we bought. The short of it is, we bought a 14 unit property in San Diego that I thought was in a really great market. Was surrounded by employment hubs. And I
Mm,
think, frankly, that market, it was underserved. I think it still is. I think people know now that we're aggressively buying there, so we're creating a little bit more competition. But the short of the story is that we finished renovating that asset. It took us about 13 months. one month than what we're projecting. But we came in under our construction budget. The place looks, amazing. In San Diego, a little bit different because you're buying it, two to $350,000 per door.
Yeah. Yeah.
But we got in, I think, at a really good buy there. The community looks great now. Funny story is the seller that sold me that property used to underwrite for a company in San Diego where we would borrow from them. They were a private hedge fund, and I think
Mm.
he did over 30 loans with them. So he knew me and my name from all the deals that he used to underwrite for his boss, which was the president of the company that I had a relationship with. So when
Mm.
he saw the offer come across, he said, "Hey, look, I know exactly who this person is." And that was
Mm.
the reason why we got that offer over and above everyone else. And we got it at a great price because he knew we would close. And then last week, we paid out $75,000 to our investors for coming in under our construction budget.
Oh,
So that's
great. You
I
got
think a,
rewarded.
a full cycle story
Hmm.
about, how we improve the communities and then also how we make, we turn those experiences into win for our investors or our clients.
Mm.
And the residents in that community as well, it's just a completely different community. So.
Nice. Truly making a difference here in people's quality of lives. That's fantastic, John. So I got to ask you here now, looking ahead, where do you see Fidelity Business Partners in the next 3 to 5 years? So if you had a magic wand to fix just one thing in the real estate investment and development sphere that's that's holding FBP back from something or slowing your growth down somehow, what would that one thing be?
Yeah, sure. Okay, so let me address the first question. I think where
Yeah.
we're going to be in the next 3 years.
Yeah.
We've already started the transition to being a private equity company. I think uh,
Okay.
I absolutely am convinced that that is going to be the opportunity for us going forward because it's going to allow us to buy better quality assets for our investors. But also, I think it's going to do a couple of other things. It's going to allow us to move into some different markets that we otherwise wouldn't be able to unless we, fully made that transition and also implemented the technology, to be able to, um, I think, be competitive as a private equity company, right? So
Hmm.
that's where we're going over the next three, for sure, 5 years. We're already starting that transition, just improving that platform. Um, let's see. The second question that you asked was biggest constraint today. The biggest constraint today for us has never been deal flow. I think
Hmm.
we have some pretty good systems in place now for that, even though
Hmm.
we're making some tweaks to improve that on the advertising side. I think the biggest constraint for us now is probably capital, right? It's capital, but it's on the equity side of the equation for us. But the constraint, when I say a constraint, it's not a lack of capital. It's rather, partnering with other, I think, savvy investors, whether they be, larger entities, family
Hmm.
offices, but partnering with, other firms that we can continue to learn from and grow from and evolve with, rather. I
Hmm.
think what I'm seeing and from what's really worked for us is our greatest successes have come from working in teams of great people, right? And so I think the internal message that I'm giving to our team is, hey, look, we need to be constantly on the lookout for great people. And part of our evolution of great people is going to come
Hmm.
down to partnering with other firms that are better at doing certain things than we are, where we can
Yeah.
leverage our talents for them and then their talents with us, and just create better opportunity, right? So, an
Hmm.
example of that is, me working with, a very large developer out in the Carolinas. We actually get on a call on Wednesday. I met him at a private equity group or function. Really neat guy, really great guy. I think he does probably over $200 million a year in revenue. And so we're going to talk about how we work together. And what
Right.
value I can bring to them and vice versa. And so I think that's really the next phase of our evolution. And that
Okay.
whole I think that whole focus is just going to create more opportunity for the investors that we serve and the people that we work with.
Nice. Wonderful. Here. What kind of advice would you give to a young, aspiring entrepreneur looking to get into the multifamily space here? What kind of wisdom can you impart here? Okay.
Yeah, yeah. Okay, so I'm going to break that question down a little bit, right? Because
Sure.
at this point in my career, that can mean a lot of different things. So, a new person getting in wanting to invest, or a new person getting in wanting to, what is the need and what is the focus?
Yeah, to sort of follow in your footsteps here. To
Okay,
go
well,
through.
okay. So if you're asking, hey, give me some advice for someone who wants to do what I'm doing today, I think the most important thing is just be yourself, you know,
Okay.
be yourself. I think when you know exactly who you are and you're comfortable with who you are, there is no one that's going to be able to compete with you, right? I think everything thereafter then is going to be a function of just your work ethic and your willingness to want to continuously learn and grow. So that would be my first piece of advice. The second is um, partner with really smart people to accelerate your learning, because there's no replacement for someone's wisdom that has already been there, and
Mm.
all of the mistakes that they've not only made along the way to prevent you from doing that, but all of the lessons that they've learned along the way that will help accelerate your wealth much faster. And so I think those would probably be the two biggest.
Nice, nice. Don, thank you. Thank you. This podcast has been incredibly insightful here. And your company, through your leadership, has achieved tremendous things for the community that you serve, and your investors as well. So I want to thank you for sharing your expertise today. Any
Sure.
last words? And where can people find you? Where are you online there?
Yeah, absolutely. You can go to our website at fidelitybps.com, boydpaulsam.com. You can find me on LinkedIn, pretty active on LinkedIn, or, let's see, Facebook and also Instagram as well.
All right. All right. Well, John, and thank you so much for being on today, and good luck as you continue to provide success to investors and your community out there. Thank you, John.
Yeah, you're very welcome. Thank you. Appreciate it.
All right. Okay, so good. That's a wrap. Thank you so much.
Yeah, not a problem. Not a problem. My pleasure. Actually, what some of my light went off. I just saw that, but I didn't stop. So
Oh,
you're
okay.
gonna
No,
you're gonna
I
see
can see
you're
you
gonna see
fine.
this. Yeah, you're gonna
Yeah.
see the podcast dim out. Probably dim
Uh,
out. Probably I think it was about 15-20 minutes through. Not a big deal for me, but I just wanted to make you
okay.
aware of that.
Yeah, no problem there. I mean, typically how the tech people do it, they'll keep your visual, and then they have my audio, so they're going to be seeing you. Typically, it can be done both ways if you
Yeah,
wanted to, but
yeah,
and then
whatever
yeah,
works.
and we'll send you as many snippets, 30 seconds to 2, 3 minutes, depending on like we're not going to cut you off in the middle of a sentence or something, but yeah, you've got that insight and all that you achieved here. It's tremendously valuable for people, you know, from a mentoring perspective, uh, if anything. So yeah, and thank you, John. We'll send that as soon as we can.
Yeah,
And
sure.
let's see. So you mentioned the capital situation there, and so is that more an industry-wide thing right now, or is that's more specific to a company that's reached your level of success? Yeah.
I think in this business, real estate is a capital intensive business, right?
Mm,
I think companies that are forward looking are always going to be in the business of raising capital. I think the only difference there is who's behind the capital. And right now, we're more interested in who's behind the capital than just
yeah.
bringing on capital, right? And when I say who's behind it, meaning finding firms for us to work alongside on projects where we're also learning, right? Where, hey, yes, they're coming in and they're injecting capital, but um, the who's behind the capital is the expertise, the value that they can bring to us to enhance our business, our expertise internally. Those things I
Hmm.
think are extraordinarily valuable and take a little bit more effort to foster, to create.
Nice, nice, nice. Yeah, all right. So our company here, if there's alignment, but we do growth plans for other companies, and we focus on, working on operational improvements and as well as bringing in, the AI, which is so critical these days. And you know, I like to point out to folks, which I'm sure you're well aware of, the Morgan Stanley study. Companies that are able to integrate that successfully in a quality manner in their company, they're 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 worth at least 20% more, 25% more than companies who don't, and the ones who don't get targeted for buyouts. And I only mention that because um, I'm 67 years old, right? And this part of development in the economy here is critical for anybody that's wanting success and the ability to keep moving forward with their plans for their company. So um, yeah, so we do that, and I just want to put that out to you. If there's interest that way, we can provide a highly detailed growth plan. You're clearly at the top of your game here, and this may not be of interest for you, but I wanted to mention that, John. So we do that for other companies, and I'd be happy to do that for you. Uh, Not any obligation on it either. And
Sure, sure,
the
sure.
chance to get to know you here and get you on this podcast in front of people. I mean, that's the big thing. So, but if there's
Yeah, well,
any, yeah,
yeah. I'm really grateful, Bill,
yeah,
for the
yeah.
introduction and reaching out. We went through our planning cycle already in December. Really, it's November,
Oh,
December, so we already have that in place. We're constantly evolving it. As you know, a business plan, a 12-month business plan, for
yeah.
us, we don't look past 90 days because those
Okay.
plans they change every 90 days. I don't. I've learned over the years to not important to communicate what our vision is for year one,
Hmm.
two, and sometimes three, a long-term vision, but
Yeah.
all the adjustments they happen every month and every
Yeah.
quarter. So we don't plan beyond, at least with our staff, we don't have conversations with them beyond 90 days because
Yeah.
things here, they move in this space so frequently and they're constantly evolving. And I think it should have just been our best way to keep people focused. But
Yeah.
what I am open to though is you sharing your information. I can add you to my contacts and make a note that you're in the business planning space, and as the need comes up or arises, you will be someone that we can reach out to as well.
Oh, that'd be excellent. That'd be just good, just so good. So yeah, and I mean, I challenged myself 5 years ago now that I would buy a property using only technology and using all the latest stuff, and I did it. It wasn't easy, but I did it. And then there's got to be other people in my situation that could benefit from that. And that's kind of how I got going with this, and I just
Yeah,
love doing podcasts too.
I can tell. I can tell,
It's the
Bill.
coolest thing. So, um,
Well, you're good at it. I can tell I can tell you get a lot of joy out of it. So, man, keep doing it because you're great at it, and it's great to see someone constantly smiling. I would just keep doing what you absolutely love. I can tell you really appreciate it.
all righty. Well, thank you so much.